The Federal Reserve leaving rates unchanged at 0.25% and continuing to project or forecast zero rates through 2023. I can give you a little detail on that. Only one Fed official projects a rate hike in 2022. 5 forecast rate hikes in 2023. But bottom line is the very few are projecting anything to happen through 2023. It's leaving the long-run funds rate at 2.5%. It does see a somewhat better economy, up, say, 0.2% to 4.2 for 2021. A little bit better unemployment rate, a little bit better job growth for 2021, but mostly leaving its forecasts unchanged. It's offering a little more detail on asset purchases than it had in the past. Markets were waiting for some guidance on that. We did indeed get a little bit more. Asset purchases, the Fed says, will continue until employment or price stability goals are met, and price stability goals are met. That really brings in line the guidance that the Federal Reserve has provided for interest rates, brings in line the asset purchase guidance, which is pretty much what was expected. And then a whole bunch of stuff that reads exactly like it did last time. The reason is because it's the same. The Fed is committed to using its full range of tools. Economic activity remains well below levels at the beginning of the year. There is weak demand holding down inflation and weak oil prices. The path of the economy, the Fed says, and it has said, depends on the course of the virus, and the health crisis will continue to weigh on economic activity. It continues to aim for inflation above 2%, quote, for some time, and is maintaining zero rates until maximum employment and price stability of 2% inflation is achieved. Finally, one little note here, or major note if you're on the other side of it, the Fed is extending the emergency dollar swap lines that it put in place as a result of this crisis with 9 foreign central banks. Tyler, back to you.
So most of them think no changes in interest rates into 2023, only one saying that rates might go up in 2022. Did I hear you say that the prediction of economic growth for 2021 was 4.2% in aggregate?
Yes. Yes, and I can double check that in just a second here, Tyler. Yeah, it's 4.2 in aggregate. I believe that's up 0.2%.
From what it was. That would be a very good year, wouldn't it, Steve, in terms of growth over the past few years? We haven't even had a 3% growth year over the past 4 years, have we?
Yes, that would be a very good year. And if you give me half a second here, Tyler, I'll get you the actual projections. Yes, it's from 4 to 4.2, going down to 3.2 to back to 2.4. The Fed believing that the long run rate is 1.8%. For growth. And Tyler, you bring up an interesting point here, because really what's happening is the Federal Reserve expects the economy to run above potential for 3 years as it catches up with the losses from 2020. And it sees really very modest inflation and very low interest rates in that context. So you want to know a reason for buoyancy perhaps in the stock market. Fed's going to let her run for a while, Tyler, not changing interest rates, not forecasting much inflation while the economy runs above potential.
Shepard Smith here. Thanks for watching CNBC on YouTube.